The average American retires with just $87,000 saved. At normal withdrawal rates, that money runs out in under 3 years. 3 years! They're nothing. Here's the painful part. Most of them were saving the whole time. They just had the wrong account. Today we fix that. 7 key points. Roth IRA versus Traditional IRA. Let's go. Point 1. What is an IRA? IRA stands for Individual Retirement Account. It's a special savings account built for retirement. The government created it with one goal: help you save smarter. Here's the big deal. IRAs come with serious tax benefits. You're not just saving money, you're protecting it from taxes too. There are 2 main types, Roth and Traditional. They are not the same, and choosing wrong could cost you thousands. Point 2. The core difference. This is the only thing that really matters. Both accounts grow your money over time, but they handle taxes differently. Traditional IRA, you pay taxes later. When you pull money out in retirement, Roth IRA, you pay taxes now. But everything after that, completely tax-free. That's the whole game. Do you want your tax bill today or in 30 years? Point 3, how the traditional IRA works. With a traditional IRA, you invest pre-tax money. Your taxable income drops right away. Here's a simple example. You earn $55,000 a year. You put in $6,500. Now the government only taxes you on $48,500. That's real savings today. Your money grows inside the account for decades. But there's a catch. When you retire and withdraw, every dollar gets taxed. If tax rates go up, you pay more. The traditional IRA rewards you now, but it sends the bill to future you. Point 4, how the Roth IRA works. The Roth works the opposite way. You invest money you've already paid taxes on. No deduction today. No tax break this year. But watch what happens next. That money grows completely tax-free. For years. For decades. When you retire and withdraw, you owe nothing. 0. Let that sink in. You invest $6,500. It grows to $65,000 over 30 years. That's $58,500 in gains. With a Roth, you keep all of it. With a traditional, you'd owe income tax on the full amount. Big difference. Point 5. Who should choose which? This is what everyone wants to know. Here's the simple version. Young and early in your career? Choose the Roth. Your tax rate is probably low right now. Pay a small tax today. Get decades of tax-free growth. Earning a high income right now? Traditional might make more sense. The deduction is valuable when you're in a high bracket. You may also be in a lower bracket at retirement. Not sure which applies to you? Roth is the safer bet for most people under 40. Point 6. Rules and limits. A few important numbers to know. In 2024, you can contribute up to $7,000 per year. Over 50, that limit goes up to $8,000. That total is shared across both accounts, not each one separately. Roth IRA has income limits. Single filers above $161,000 can't contribute directly. Married couples above $240,000 can't either. There are workarounds, but that's another video. Traditional IRA has no income limit to contribute. But the tax deduction may phase out depending on your situation. Both accounts have a withdrawal age of 59.5. Traditional IRA requires withdrawals starting at age 73. Roth has no required withdrawals ever. That's a huge estate planning advantage. Point 7. You don't have to pick just one. Here's what most people miss. You can have both. Many smart investors use a Roth IRA alongside a traditional 401k at work. Some money grows tax-free, some gets a tax break today. You're covered either way. This is called tax diversification. It protects you no matter what taxes do in the future. Nobody knows where rates will be in 20 years. Both accounts means you're not gambling on one outcome. You can also convert a traditional IRA into a Roth over time. It's called a Roth conversion. You pay taxes on what you convert, but all future growth becomes tax-free. You have options. Use them. Here's the quick recap. Traditional IRA, tax break now, taxed when you withdraw. Best if you need relief today. Roth IRA, no break now, tax-free forever after. Best if you're young or expect to earn more later. Either one is better than doing nothing. And starting 1 year earlier makes a massive difference over decades. If this video helped you, hit the like button. It helps this channel reach more people. Subscribe so you don't miss the next one. We cover money, investing, and wealth in plain language. No fluff, no confusion, just the stuff that actually matters. Start today. Your future self will thank you.